be in focus today is going to be HCL Tech, because post-market we are going to be getting numbers for HCL Tech after TCS reported numbers last week. And the stock was heavily under pressure on Friday. All eyes are going to be on HCL Tech, wherein we are expecting the revenue to see a little bit of a dip this time around. You have EBIT that's expected to fall by around 3.5%. Revenue on the back of the crore revenue, the rupee revenue is expected to be flattish, while the dollar revenue is expected to go up by 1%. Net profit could be under pressure, a 2% hit. Deal wins are likely to be stable, but revenue conversion could be sluggish. So all eyes are going to be on how DMAT reacts today post numbers and HCL Tech numbers that will be out post market. But another macroeconomic indicator, Shrishti, that we're going to be watching out for today is going to be the CPI number. It's well below the RBI's target for quite some time now. So what is the street indicating, and what are we penciling in for CPI this time?
Well, definitely, Snehi, and like you rightly mentioned, it's well below the RBI 4% inflation target for quite some time, and to be precise, it's the longest disinflationary streak in India in at least a decade, and actually the longest stretch in nearly 6 years that inflation has stayed below the RBI medium-term target of 4%. And this time, in terms of the expectation when it comes to the June CPI data, we are expecting a number of 2.5% versus 2.82% on a month-on-month basis. The range is actually quite wide, to 1.8 to 3.5% in respect to the range that these economists are actually indicating, but it's more than a 6-year low that could be coming in for the CPI inflation if this number comes near about that 2.5% mark. The reason for this is actually the cool off in the food inflation prices, because once again the easing of the food prices, they were seen to be supporting the CPI number overall, because do remember same time last year there was a high base of these vegetable prices that impacted the CPI number, but because of this time a bit of a cool off is what we are already experiencing and seeing. Rather, 2.5% is the expectation. So on the macro front, don't believe that there's something that could come to worry or that could come to trouble us on that particular front, but let's track the numbers as well, and 2.5% is what we are expecting.
Okay,